Welcome back, ladies and gentlemen. You're watching Startup Central with me, Sumita, Kareer. Now, Tracxn's latest Geo-quarterly India Tech report shows Delhi overtook Bengaluru in total startup funding for Q1 2025, driven by strong IPO exits. Now, India secured $2.5 billion in funding, ranking at number 3 globally. Key sectors included auto tech and B2B e-commerce, while M&A activity surged by 41% year on year. Let's get in some more insights on that report. Let's welcome on board Neha Singh, who's a co-founder of Tracxn. Thank you very much, Neha, for joining us here on ET Now. Your latest report suggests that India's startup ecosystem has maintained its growth trajectory in the first quarter of 2025, securing $2.5 billion in funding, and it ranks third globally. Take us through some of the key takeaways from that report in terms of deal volumes and stage-specific funding.
Thanks a lot for having me. Yes, so to summarize, it looks in the first quarter of the current calendar year, which is 2025, a total of over 2.5 billion got invested in over 200 companies. And if you look at it, there's a slight uptick from the previous quarters. So from the previous quarter, slightly over 10% up, which is there. Though the deal volume was slightly slower, I would say, in this quarter, but the overall dollar invested was higher. And this is also thanks to some of the late stage round that happened in some of the pre-IPO companies. Last year, as you know, it was a fairly active market, for the overall IPO market. And, it also saw some of the venture-backed companies, getting listed. So, there's also a good pipeline of companies which are probably, in the process of filing the DRHPs this year. And that's where you also saw some late stage investments happen in that space.
Right, Neha. So let's expand a bit more into the IPO space that you're talking about. 2024 was a record-breaking year, but will momentum be sustained this year is the big question, because there are many companies that are speaking about getting listed on D Street. What are going to be the tailwinds and headwinds for IPO activity this year?
So overall, at least the first couple of months look slightly slower than last year, but there's a good pipeline of very good companies. And if you look at in the last 2 years, the narrative has little bit changed in terms of companies. At the peak of 2021, it was, from growth at all costs to now profitability. A lot more companies are now talking about, being profitable or being very close to profitable. And you saw, a lot of companies actually also flip, for instance, their HQ from either Singapore or US to India to tap into the buoyant IPO market over here. So earlier, there didn't used to be a lot of venture-backed companies that would probably get listed, like 5 years back. But I think thanks to some of the successful IPOs that you've seen in the last couple of years, that has actually encouraged a lot more founders to tap into the IPO market, I would say.
All right, so lots to look forward to so far as the IPO space is concerned, even this year as well. But Neha, let me ask you about the macroeconomic headwinds that we're seeing due to geopolitical risks that are building up. You have the Trump tariffs that will be announced day after tomorrow, at least as per IST. We've seen FIIs exiting. All of these factors, how do they impact investments in the startup ecosystem?
So overall, you saw some impact globally. Like if you look at, global total dollar invested, it was slightly less than what you would have seen 2 years back. But having said that, apart from some of the sectors that people are still watching, whether that will be impacted given the whole tariff, and how that unfolds, there are some sectors which are actually getting a lot more investor interest, I would say. And, the top 2 of them here would be, AI. That continues to be one sector which is very hotly followed by a lot of the venture capital investors globally as well as in India. So globally, you're seeing a lot of investments that are happening in the AI infrastructure space. For instance, in India, you saw investments happen in the AI application space. So that continues to be like one sector which is getting a lot of investor interest.
Right. So, Neha, let me come to a point that you mentioned a short while back, and your report also indicates that later stage funding saw a surge in Q1 of FY25 and early stage investments decline. What does that really say about investor appetite? Are they open to taking more risks?
Right. So the early stage funding, if you look at it, was slightly lower. It's primarily because of the low deal volume. So a lot of investors are probably, taking it a bit slow, because if you look at there were a lot of investors which used to be very active in the late stage, like SoftBank or a Tiger Global, which are much lesser active than what they were probably 3 years back. So you see a little bit of that trickle down across all the stages. But having said that, there is still growth in some of these, volume that you've seen. So, for instance, the early stage was slightly slower, but having said that, the late stage was actually higher than last quarter, and that's thanks to some of the late stage round that is happening in companies like which are probably looking to hit the IPO market within the next 1 to 2 years.
Right, Neha. So let's also talk about AI, because this is one segment that you mentioned. A lot of investments are also coming into AI and new age tech. But within these segments within AI, where do you see funding getting deployed? Is it in infrastructure applications, or is it, in LLMs? Because in the United States, there's been more focus towards infrastructure. How is that different from the kind of investments that are being made here in India with respect to the AI space?
Right. So AI continues to be one theme which investors globally are looking at. So, while in US, there are a lot of rounds that happen in the AI infrastructure layer this quarter as well as last quarter, India saw more of the application layer, companies which are tapping into that either for enterprise AI or for different verticals. So you saw companies coming up in that. That continued to be one theme that investors continue to look at more companies in. And another interesting actually sector which is also seeing a lot of activities, I would say quick commerce. So given the success of companies like a Blinkit, Zepto, or a Swiggy's Instamart, you're also seeing other companies tap into the quick commerce wave and cater to different verticals. So there also is another vertical which saw investments in this quarter and continues to have investor interest, I would say. And the third, I would say, is consumer brands. So, given that you will probably also like the acquisition which is happening of the large brands, but this continues to be one theme where you are seeing companies break out and, brands come up in different categories.
Very interesting, Neha, that you point out towards these, consumer brands and consumer tech brands, which are gaining a lot of interest. And in fact, some of these have been acquired as well. We've seen that happen with Minimalist. Will we see more of these acquisitions in this year as well?
Yeah. So this quarter did see a spike in terms of number of acquisitions. If you look at the total number of acquisitions, there was slightly less than 40 acquisitions. And it's not just about the numbers, but it's also the volume. So this quarter also saw some sizable acquisition, like you rightly mentioned, of Minimalist getting acquired by HUL. You also saw Wingify having an exit. So I think that is another interesting thing. Here, the number of the acquirers are actually varied, which is a good thing. So you are also seeing some exits happening in this ecosystem, both from the M&A perspective as well as from the IPO perspective, for the venture capital investors. So I think that is a good thing for the overall ecosystem, as the dollar which is circulated back to the LPs might find itself back to the ecosystem through the funds.
All right. So this consumer space is going to be very interesting, in particular to track. But one final question, Neha, before we let you go. Your report also mentions that Delhi is surpassing Bengaluru in terms of the total dollar invested. Essentially, it's a given that Bengaluru is the startup hub. So all the activity happens there. But this is a surprising finding. Will we continue to see that shift away from Bengaluru into other cities, for example, Mumbai and Delhi? Because Mumbai is also, rather Maharashtra is also positioning itself as a tech destination with the kind of announcements that have been made by Devendra Fadnavis.
Yeah, so that was a really interesting stat when we were compiling that Delhi is actually standing out in terms of total dollar invested. And, having said that, if you look at the top 3 cities, it continues to be Delhi, NCR, Bangalore and Mumbai. And, Bangalore continues to have more number of deals, I would say. And typically we have seen, that continues to have sort of more tech investments. Obviously, Delhi has a good success of exits, I would say. Like if you look at a lot of the venture-backed companies which have exited, Delhi is probably at the highest over there. So I think, yes, Delhi kind of stood out, but, Bangalore also continues to be a big hub in terms of if you look at the number of investments that have happened. and Mumbai is probably next in terms of, especially in the fintech activity.
All right. So, well, that's an interesting comparison between Bombay and Bengaluru and New Delhi. Well, on that note, Neha, thank you very much once again for joining us right here on Startup Central and sharing your perspectives and your thoughts and your analysis of the kind of performance that the startup ecosystem has given in the first quarter of this year. Well, on that note, ladies and gentlemen, it's time's up on Startup Central. Hope you liked the show as much as we did putting it together for you. From me and the entire team, goodbye and thank you very much for watching.